Cushman and Wakefield have a global mantra that says that we are interested in the way, transforming the way the world shops, works and lives. So it's no coincidence that in Australia that we want to build a very strong retail capability, which is what we're doing.
Just a quick year in review of the investment market. There was $7.4 billion of retail/shopping centre properties that exchanged and transacted in 2014. 134 transactions over $10 million, which is more than 11 deals every single month on an average. We've actually seen the median yield or cap rates compress quite significantly over 2014. 7.5% is what we record as the median yield for 2014, and that compared to 2013, which was at 8.5%. So all in all, a phenomenal year for retail investment activity, and hence the reason why we're here to show our capability and what we can do for you as our clients.
Retail sales has picked up quite strongly towards the end of 2014. So by the end of 2014, retail sales is about 3.6% growth in volumes, and that level is above the 10 years trend. So we see this as a very positive sign for retailers in Australia, and we expect that to continue forward. So what has been the main driver for this strong growth in retail sales? So we have dig deeper into the consumption patterns in Australia, and we've noticed that the strong driver of these retail sales is coming from spending, the increase in spending, in discretionary spendings.
Eal compression, you know, we think that it's anywhere between 65 to 120 basis points, depending on the type of asset class you're looking at. But the interesting part that we actually found in our research was there was yield compression, but the spread between bond yields actually widened. We do expect this compression to continue in 2015. However, it's going to moderate, and the moderation is going to come on the back of not more so to continue exploiting that yield spread. It's probably going to be more the case of quality stock being not available, because retail is becoming more and more difficult to acquire retail property which has strong fundamentals and classifies into that institutional grade investments.
The planning system's increasing density around transport nodes. Shopping centres are probably one of the largest contiguous pieces of real estate within our towns, and it makes it for an easy proposition for planners to increase density around those assets. So the planners are on board, and the market's starting to get on board as well, and that's twofold. That's investors getting on top of what it means in terms of an investment proposition of having an asset stratumed off between different uses, but also the residential purchasers are embracing this type of lifestyle.
Opportunities, to be quite honest, are boundless at the moment, particularly in Metro Sydney. We're encountering all the time sites coming to us that are only going to be mixed use. So we've had to really get into that space. I guess one of the main positives is that you're going to have a population and a customer base on top of you. And if you can create that perfect activity centre, they're going to come and enjoy spending time with you and enjoy shopping there.
Around almost every single one of our major railway stations and nodes, the ethnicity was 60 to 80% overseas born. So in terms of the key trends in those really high dense mixed use developments, you've got a consumer base which is happy to and prepared to, and over time will upgrade to Ashfield to Chatswood into high density living. So you've got a consumer base very comfortable with the idea of living close to railway stations, living close to ferry stations without enormous car access, and is very happy to live there, but they want services. And I think the key in the work that we've undertaken with people with mixed use developments is it's when they start leasing, and it's when you understand the retailers know better than you do as an owner and better than I do as a consultant, they really understand these mixed-use precincts, and when you start getting retailers understanding that and want to be part of these precincts, the risk that owners see in those projects doesn't exist. But I'll always say what consumers want is you still need a density of population, that retail is a follower, not a leader. You still need a certain amount of people within those areas. So you just can't build it and they will come in these precincts. You need that density, and that's what's happened at East Village. That's what's happened at places like Balgowlah. We're seeing in a range of locations that Gasworks and in Brisbane at Newstead, that if you hold off retail for a bit of a period of time, when it opens with a bang, and it's a great success.
Do you remember what happened to Asia in the 1970s and 80s? That's when high-rise living and high-density living was introduced. And you know, since then you have a generation of people growing up on apartments. Some of them have never set foot on a grounded house. So, and a lot of them are coming to Australia, and you know, they come with their experience, they come with their demands. So, and they have no problem raising their family on an apartment.
Recently, we just had there was a court case that just came out where the government talked about, you know, the minimum apartment area sizes, and that's thrown a little bit of uncertainty into the market at the moment. But I suppose what we're looking at the moment, you know, the issue of affordability is always one of the big key issues that are in the political spectrum, as well as the economic cycle that we're in at the moment. So typically, most of our apartments are designed to the SEP 65 design codes. So, you know, 50 square metres, 75 square metres, and 95 for 1s, 2s, and 3s. But I suppose what we tried to be able to offer is external communal areas that actually have the ability for people to actually go outside their apartments. It has a twofold effect, I think. It helps bring the price down of the apartments, but it also gives, and the communal areas actually help provide some external amenity. So at top right, for example, on one of the presentations we saw, there was a swimming pool, we've got a gymnasium, we've got a theaterette, a couple of piano rooms, and a spa. So I think they're all sort of things that when you have a development that comprises of, you know, 653 apartments, having a smaller apartment size is then sort of compensated for by having external amenities. And that's what we've tried to go through and do with top right.
And typically in a metropolitan area, you might have to find a catchment which was 3 kilometres in the past. When you've got a high density area, it can be down as low as 1 kilometre now when you've got those density of people.
Cushman and Wakefield started in Australia a lot later than our competitors. In fact, we've only really been here for about 5 years. And you might have noticed recently that we've ramped up, particularly in the last 12 months. Our Australian business has been identified globally as one of the handful of geographies that the Cushman Wakefield global brand wants to invest in significantly. And what you've seen in the last 12 and 18 months is really just the beginning. And changes are already quite evident amongst our business, both in the scale of the assignments that we're working on and the number of transactions that we're completing.